Good morning, this is Wayne Blau with another Smart Profit Maximizing Moment. Welcome to Monday. Another week has started. Hope everybody's doing fine. Today we're going to talk about smart mid-year tax planning moves. All right, I can say that, mid-year tax planning moves. But first, let me do a better job introducing myself. My name is Wayne Blau. I'm the founder of a local CPA firm since 1991. I've been working with small business owners, helping them increase their profits. It's pretty simple as that. Keep more of their own money. Actually been passed the CPA exam in the late 70s, so I've been doing this a long time, working mainly with small business owners, all right, other than a 6-year stint at Magnolia Coca-Cola, which I would not call small business since it was pretty large. But that gave me the other side of the coin, so everything gives you experience, so don't put that aside. Also the creator of the Smart Profits Maximizing System, which is one of the main things that we're trying to do with these videos. 2 weeks from today, we're going to start our first profit challenge, where basically we're going to teach you how to double or triple your profits in the next 30 to 60 days. Truthfully, 6 months. I got a 6-month program that's easily guaranteed to help you increase your profits dramatically. But the first challenge is free. And a ton of good information in there, so keep your eyes open. I'm going to tell you how to sign up. Got a few things we're just working out, bugs, making sure that when you sign up you go to the right place. So hopefully tomorrow, Wednesday, the latest. So the other thing we do, like I said, we focus on 3 things. One is the profit planning. The second thing that we do that's really important is the tax planning, and most of that happens at the end of the year. All right. And the third thing we do is file your tax return. Most of you just barely finished your tax return. But mid-year is really a time to start thinking about tax planning. June's almost over. By June 30th, you got a pretty good idea how your year is going to go. Now you can turn it around. I mean, that's what profit planning is. I've seen people make great increases in the last 6 months of the year. So you can do a lot there, all right? But thinking about tax planning at the beginning is where at the middle of the year is where you really start. Every time I meet with a client, we talk a brand new client in particular, but even when I'm doing a business return that we're going over the tax return with them. One of the things I almost always do, especially with new clients, I do it every time, but pretty much every year I tell my other business owners, hey, keep an eye on it. If you see by June, July that you're having a really good year, give me a call so that there's things we can do before the end of the year to help you. See, most businesses start off like this and do the hockey stick. Where what happens is right in here, when you do that big, that's where I need you to call me, because otherwise you're going to have a huge surprise at the end of the year when there's things we could have done, all right? Especially in July. We got 5 months remaining that we can do. So first thing, if you think you're having a big year, call, set up an appointment. Let's review your books through June. Let's look at last year's tax return. Let's look at, even if we're not going to do it, because we might say, let's sit down and take a look at this a little bit later in the year. But even if we're not going to do a tax plan, it's a good idea to get a projection so you know what you're looking at, all right? Now, 6, 7 months out, it's not going to be a great projection. It's going to be all right, but it's not going to be great. Especially if you're in construction, it can change so dramatically from one day to the next. All right, I've seen $1 million added in a month. It's very easy to do, okay? But it's a good place to start to see if we got some things we need to do. Make sure you file your return if it's on an extension. Get it done. Get it done early. You don't want to be part of that last minute rush where there just isn't enough time to react. If I call you up on October 14th, things due on October 15th, and say, you owe $80,000, you're not going to be happy. So get it in early, get it done so we can do something about it. Had a client recently that owed $14,000 because of the Obamacare premium tax. They'd gotten too much credit. Was able to make a small accounting change. We were able to make a change because they were right there. They were right there. Just reduced their income by a couple $1,000s and eliminated that tax. So there's things we can do if we have time, all right? And legally. We didn't do anything illegal. Trust me, I'm like my clients, but we're not going to jail with them, all right? Get organized. Ask any taxpayer and we'll tell you that the organized taxpayers always end up paying less. I really don't care what system they use, but my fee will be lower if they bring me organized records, plus it'll be more accurate than if they just bring me a box of receipts and check stubs, okay? On that note, improve your accounting system. Make sure it's giving you what you want accurately. If you're considering buying major equipment, get it going now, all right? And I don't mean just walking down and getting a computer or something like that. But if you're in the heavy construction field and you're buying a 500, 800,000, piece of equipment, it takes time to get that arranged. If I do your tax planning in November, December, often you don't have time to get it arranged. Plus, you don't have time to put it in, and you won't get the full advantage the first year often. All right. Section 179 and 100% write-off makes that a lot easier than it used to be. So this isn't that important, as important as it was in the past, but you still need to get the financing in place and make sure you get the equipment set up. Ordering the equipment is not enough. It has to be set up and established and running before you can get the depreciation in that year. All right. Retirement plans. I can do a SEP at any time. You come to me in November, December, I can create the SEP and fund the SEP all the way to the due date of the return the following year, including extensions. So if you meet me in November, December, and we decide to put $40,000 into a SEP, I got till September of the following year if it's a corporation or a partnership, or October if it's a Schedule C. All right. But if you're really hockey sticking and your income is exploding, we might want to put it in defined benefit. That has to be set up and established before the end of the year. We might want to put it in 401k. That has to be established by September 15th, October 15th. I always forget. I always have to look that one up. But I mean, it has to be set up by that time. So that's why we want to look at June and July and see if we want to set that up. Cost segregation plans take time too if you got assets that, buildings that we need to look at. Travel. A lot of us are traveling in summer. Review the rules with your tax preparer and see if there's a way that you can deduct it. It's if the major reason for the travel is business, you can deduct the full expenses. If it's not, if part of it is, you might be able to deduct part of the expenses. The key, as usual, is documentation. You need to make sure you know what to document and have the proper records. Look, to get the most out of tax planning, you need to project your 19 income plus your 2020 income, because we want to average the 2 years together. You might have a big windfall in this year, but next year you don't expect to have much. So we want to delay income into 2020. It may be the other way around. You got a big contract that's going into play in 2020. We may want to delay expenses into 2020. You want to average it off. Every situation is unique, so I really can't tell you what a standard plan is going to be. But I can tell you the time to call your CPA if you think you're having a big year is in July, not next year when you drop off your tax stuff. Because at that point, there ain't much we can do, all right? Hey, until next time, this is Wayne Bilal saying let's make this our most profitable year ever. Thank you very much.